Hey everybody, it's Jeff Gibby with Metastock. Hope you're doing well. Thank you for coming today. It's good to see you. Hello. As you get in, say hello. Let us know where you're from. It is. I'm glad you were able to make it today. Good to see you again, Vincenzo, and returning officer. Welcome to the show. Okay. My name is Jeff Gibby. I'm going to have a part where I read a legal disclaimer and then I introduce our guest today. So let's go ahead and kind of kick things off and let's get to that legal disclaimer. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. This is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in this presentation should be construed as an investment advice or solicitation to buy a security. Hello, Vincenzo. Namaste, returning officer. Okay, let's go ahead and kind of kick things off. If you're watching us on Facebook, welcome. It's good to see you. Be sure to like. It helps a great deal. If you have questions, make sure to ask them. That helps also. We love to see questions. If you like what you see today, or if you want to get other really, really good market videos, make sure to subscribe to the channel. That also helps a great deal, and we appreciate it. Our guest today is Rahul Mohindar. Rahul has been a great friend of Metastock. I believe Rahul started as a reseller of Metastock at about the same time I started as an employee of Metastock. Might have been different off by a couple of years, but it was in the late 90s. I started here at Metastock in 97. Rahul's been a great partner of Metastock, though. We absolutely love him. He's developed a system that he's just includes with Metastock that's called the RMO model. Very, very exclusive system available only in Metastock, and actually the system that I actually risked my very first dollar with. And it's really, really good. Rahul, to kind of give you some more background on what he does a lot of it. He teaches people how to trade in India. He's a guest on CNBC India and CNN India, and a very, very something I like about Rahul. He's very, very understandable. He's very straightforward. When he says something, I don't scratch my head and go, huh? He just does a really, really good job. And so I think that's what leads to him being such a good coach. So with that out of the way, I'm going to get out of the way. I'm going to go ahead and get Rahul in here. I'm going to let him talk, and I'm going to go ahead and get the
muted
turned over to him. So Rahul, how are you doing?
Doing great. Thanks a lot, Jeff. Always very kind with your introductions.
I have another thing I want to tell you before I get out of the way. Hello, Kelly. Good to see you. So yesterday we were looking at your new picture, the new biopic that you sent in. And one of the comments that we had, I think it looks great. One of the comments that we had from Bobby, I think you might have met Bobby before, but he said that he thinks you're aging backwards. For what it's worth.
Someone's reading it right.
Right. So I can see your screen. I'm going to go ahead and get out of the way. The floor is yours. Thanks for joining us.
Thank you, Jeff. Well, Jeff has a very important job to summarize a lot of what I do and help you through on how you could get started and, a lot of important ends. So we're going to wait to hear from you, Jeff. So don't think that he's running away. He's definitely coming back for an important bit. But today is a day where I'm going to introduce to you the RMO ATM, and more specifically, what's new with version 4. So whilst in this little time, I'll try and give you a brief summary in terms of what you get with the ATM add-on. A bit of the focus, of course, is going to rotate around the new strategies I introduced with ATM 4.0. Now, as a lot of you have been using the inbuilt RMO inside of Metastock, as things progressed over the last couple of years, we introduced the ATM, and we've moved from version 2 to 3, and now finally to a version 4. And you would notice that these upgrades come when we have significant enhancements. And let me talk to you as a trader to a trader. I'm not someone who's there for you as an analyst. I'm not selling you a newsletter or a brokerage service. I do what you do. I trade, I invest, and I look at these charts to make a living. And I think that's the shoes I'm going to be talking to you with. So let's try and keep this as practical as ever. When you look at conventional tools, nothing against them, be it a MACD or an RSI, sometimes we get too many signals. There was a lot of manual analysis. I'm trying to look for divergences. Sometimes the divergences keep stretching, so prices make newer highs. We keep stretching that line. We don't know when that divergence is ending. We don't know whether the divergence is valid. You get a lot of crisscross sometimes within indicators. And that's what drove me to developing a tool that clearly identifies the trend. So, this, my friends, just to quickly walk you through the inbuilt RMO, which is inside of every version of Metastock 10 and higher, is this green histogram, which really tells you if it's above zero, your primary trend is up. And I think that itself solves one of the major pieces of the equation in terms of understanding what my longer term direction is. And that saves me from the trouble of worrying that, oh, there's a divergence. And, every time I keep drawing negative divergence, I don't pay heed to it simply because of the fact that you will keep stretching the line right on your divergence, and till the newest high is made, you still keep calling it divergence. So I try to do away with a lot of the subjectivity and bring in objectivity of direction, objectivity of understanding that we need to align with the longer term trend. And that, my friends, is the RMO, which is the Rahul Mohindar Oscillator. Above zero is primary trend up, below zero, primary trend down. And this is available, as I said, inside of Metastock. This is not part of the add on, but just walking you through this because I'm going to help build on it. Because one of the best things we did with the program is we have a strong advantage of being in the direction of the primary trend. But if we could strategize a little better, why do we want to be with the primary trend? If long term a stock's bullish, we should try and trade in the direction of that upward tide. We don't want to be trying to go downstream when the river's upstream. It's about being in the direction of the stronger force, being in the direction of the bigger picture. So I'm going to dive more into charts, but just to very quickly jump into what I call the super filter. And again, let's actually dive into real Metastock charts because that's something I would look forward to a lot more. Let's look at a real chart of Apple, and this may not be live. It is not live, but it's just a quick 30-minute data. And if you look at the RMO template over here, this is with the ATM super filter. How is it different? I want you to focus on a few areas. How about this area over here, where you notice that we've got a situation where the RMO went negative, right? You can also look at the fact that the RMO was on that x-axis red. The ribbon at the bottom is red. But when you look at the super filter brings to you four colors: a dark blue, a light blue, an orange, and a red. It helps you pulse this market a little better. Why do I call it super filter? Because it further filters the existing inbuilt RMO. In other words, it is aligning to the volatility of this chart particularly, and then choosing its indicator values. Rather than working off a static value, it adapts to the symbol that you're seeing, the volatility of that symbol, and then tries to give you a much more profitable system of the indicator. Now, the great thing is this adaptiveness is automated. Nowhere am I going to ask you to choose a value. Nowhere am I going to ask you to draw a line. It's automatically self-aligning. So if you look over here, the bars are all light blue in color. And light blue bars still indicate a bull trend. So you would ignore the fact that the RMO is negative. Now, you may say there's one solitary red bar over there. Yes, there is. But I want to go and sell only if I break the low of the red bar. Like I always teach, when you buy, let's say you have a dark blue bar, don't just buy on the dark blue. You're going to wait for a buy above the high of the dark blue, right? So when you put your mouse on that bar, you see that that's not just a dark blue bar. The RMO is bullish as well. So you would notice that this slowed down your trade. In other words, if I just looked at the vanilla RMO, maybe the RMO turned up 3 or 4 bars behind. But at the same time, it saves you the trade over here, right? It saves you from getting into a false sell setup or saves you from the whipsaw. Like, for example, again, you had a little bit of a red patch, about two trading days ago, you had a little bit of this patch here where the RMO just went below zero. But look at the bar colors, they're aligned on the blue. So essentially, even on a 30-minute chart on Apple, we are looking at a long position from April 24 right up to today, which is May 9th. We haven't got a setup on red bars where the low is broken, right? So just seeing a red bar is not good enough. Similarly, when you have dark blue, which moves to a light blue and then an orange, that's where the sell comes in. So orange and red are sells, and dark blues or light blues, they're on the buy side. And we want to maintain a long position. So directionally speaking, the super filter is a beautiful study that's always been included with the uh, ATM add-on. And the great part about this is you have the expert advisor as well, which gives you commentary. So if you're absolutely new to it, the good thing is you could go into the expert, read through what various elements of the ATM. For example, there's a study called the Breakout Catcher, the SWI, the RMO2. All of this is nicely summarized for you, and you could look at this information very cohesively and understand what the trend setup is. In fact, just the font color on this shows you have more blue fonts than anything else, which is self-explanatory, right? So commentary is great, and this is further buckled up with scanners. So if you like the inbuilt Metastock Explorers, if that's something you're used to, you can certainly use that. But we've also built a separate application called the Power Screener, which scans in real time for you. So you put in a symbol list of your choice, and it automatically scans through, wherever you have a new buy signal, a new blue bar, a new arrow, a 3D buy, any kind of setup you want. There are over 40 different fields that you could scan for. And the scanner does a fantastic job and doesn't leave it to you to manually go in and run an exploration. So we've taken scanning also to that next level where we don't depend on you to run a scan. The scan always keeps running, right up to the fact that it is powered up with voice and email alerts. So if I minimize my screen and I go to my desktop, there is a separate application that I have here, which will be the power screener, which I access. And I can open that application and quickly look at what stocks. So you could have a customized stock list. You can see it auto connects to my real-time data feed from the Refinitiv RT program. No worries if you're end of day, it does work with end of day data. It's just that there is a setup, a one-time setup process that is required where you need to go in and access, you need to tell the program this is where your data lies on your hard drive. You could just open a page. So let's say if I just open one of my pages here, it'll quickly populate this page with prices, which not only tick live, but based on any indicators that I have here, it would further give me, a scan through. So we'll come back to the power screener, but that vaguely gives you a hint of what we're trying to do. We're trying to get a list of stocks, a list of symbols where you can clearly see. So here's the ATM RMO super filter. Like that, I can add a column, and there are various columns around 40 odd where you could say, okay, if I want to add something on, let's say the CTI stands for the counter trend indicator. I could get what I call a voice alert, an email alert. We can go ahead and just pop that in, and further to that, it would also plunk signals now based on the CTI. So lovely scanning ability, right? You have the ability to not just scan through the application. You also, of course, have the inbuilt explorers which we provide for you, and you have the power screeners which are going to do a wonderful job for you in terms of detecting opportunity. So the super filter, great tool to be moving to, if you're specifically an RMO lover. If you're someone looking for a fast breakout, let's look at a different chart because I don't know, you're from different geographies in the room. This one's the breakout catch, and I'm using it on a very popular instrument, the Nifty 50 futures. And the Nifty is one of the top traded indices in the world, and this is the index futures contract in India, traded on the National Stock Exchange. And this is 5-minute data. I'm just trying to give you a vista point, because in this room, you have people who are end of day, you have people who are day trading, someone's on a 30-minute, someone's on a 5, someone's on a daily. I'm going to give you different examples so you get a pulse of it. The breakout catcher is an indicator designed for someone who's trying to look for a quicker entry. And the best part about the breakout catcher, it marks these lines automatically for you. This time, we've used 3 bar colors: a beige, a red, and a blue. Just 3. Remember, the super filter was 4 colors: orange, red, light blue, dark blue. But the breakout catcher is much snappier, is faster. Now, is fast good always? Not necessarily, right? I may be someone who does not want a lot of trades, right? I may be someone who only wants to trade when my primary trend is in alignment. If I'm that kind of a trader and I'm looking for that steadiness, maybe I'm better off with the super filter. But again, as a program, we've tried to deliver to you different models, because each model has a specific goal in mind. So the super filter aims at being adaptive, being able to keep you in the direction of the primary trend. But the breakout catcher is for that light-footed trader who wants to have the flexibility of going in and out quick, right? So this is going to give you a quick sell when you see a red bar, and on top you see an indicator called the zone detector. If I could quickly explain to you, the zone detector, if it's at a value of 0, like you see over here, it's dormant. So in other words, when you see these blue bars and you see it's dormant, this is not a great place where you want to go long. But when you get the sell, the red bar over here, you see it's an active. When you see it at a value of +1, this is an active or hyperactive mode. What is the difference between active and hyperactive? This is active, but if you also have a horizontal line on it, it's hyperactive. Definition of active versus hyperactive? Well, it's tradable. I just say that dormant is a phase where the market is usually thin in volume and volatility, and therefore it's more sideways. As a general rule of thumb, I could use the zone detector across the board. So let's say if you're a MACD fan or an RSI fan, or any other indicator, candlestick indicator fan, you could definitely use even the zone detector to tell you that, look, hey, you're in a dormant place. Try and take any signal with a pinch of salt. You need confirmation, because this is the area of low volatility, low volume, and therefore could be a fake out and not a breakout, right? So let's understand, if I've got active or hyperactive, at least I have some magic of volume and volatility in the price breakout, and therefore any signal, if confirmed with volume and volatility, is more confirmed. Similarly, I always say sell below a low if you get a short. Similarly, buy above a high. Keep a little filter. Now, what is buy above a high? So in India, when I educate a lot of traders here, I keep telling them, look, if that's 22,000 rupees is the stock, and if I just kept a 20-point filter on that, this is a high of 280. And does it go to about 300? It doesn't. It goes up barely 14 odd points. So it doesn't crack through. And by the time, even though this was on a hyperactive, it didn't take the high out. And even if it did, it melted out to becoming a normal or a dormant mode, right? So you don't land up taking this buy trade. So the beauty is the breakout catcher is not only quick, but also helps you understand, are you breaking out with some volume and some volatility packed into it? Is the price action and the volume action speaking to you in terms of a proper breakout? So that is a very crisp way to look for breakouts. And again, beautiful scanner and expert advisor. Remember, everything we do has a lovely expert which does tell you what exactly is the commentary on that stock, and then you could go further into looking for explorations or alerts in terms of where you have trading signals. So let's look at the next template which we provide you, and these templates are all pre-built for you. This one's totally based off volume. And again, let's give you a little variation. NVIDIA now, so we're jumping from that index futures of India to a chart of NVIDIA. And you can see over here the SWI, or strength weakness index, as I call it. The strength weakness indicator, the strength weakness index is really measuring only volume. So in other words, what is the core, or rather the key ingredient of this study? It's just volume. And what is it studying? When price is going up, we say if price increases with increasing volume, that's a confirmation of trend. I'm sure we've all read it. An increase or decrease in price with volume is a more confirmed trend. So sometimes when a stock is falling, right? So if we look at particularly, let's say we had moved down over here, these were all blue bars. In other words, blue bars means based on the SWI, you never really punctured that red SWI line. This fall was not with enough volume to topple the uptrend that it locked in. So it locked in an uptrend over here. And why did it lock in an uptrend? Because price increased with volume and it therefore took out the downtrend that was in place. So the minute you see red bars and the red line, they are synchronized. So the red line is actually the SWI line, and the red bars are painted every time the price breaks that red line. You see red colored bars. Each time we get past the SWI line, you get blue colored bars. The great part is sometimes you have a big downfall, but they're all blue colored bars. In other words, the SWI line is holding. That means there's not enough volume in this fall. There's not enough money in this fall to call it a breakout. So it's still locking you in trend. So if you look at the last couple of bars, the last 20 odd bars shows that the volume flow is more tilted towards the negative side. And again, this is really checking that balance of volume in terms of uptrend versus downtrend. How much was the volume when you started ticking down versus how much was the volume when the market was ticking up? And this is a great way to measure volume. Now, why do I call it ATM? Automated trend modules. If I had to do this manually and start measuring, let me look for the bars that went up, what was the volume? Let me look for the bars that went down, what was the volume? And then try and do this. It becomes a colossal task. And when I say it becomes a colossal task, it's a manual effort where you're starting to draw lines, you're starting to twist and turn, put averages on the volume, things like that. If I could automate the process, I would make it objective rather than subjective. Because I always believe that at the end of the day, you and me are here to trade or invest and make money. We're traders at the heart of things. We're not analysts. And even if we may be analysts, the results are going to come when we become good traders. And if I could get a tool like the ATM, which automates my analysis, automates the trend modules that I want to follow, I could focus on my trading rather than just analytics. Today, the whole world is spending too much of time drawing lines, averages. In fact, sometimes you see people's charts, there are more lines and averages and texts on that chart, which look like rocket science, and that looks difficult, it looks tough, whereas ATM charts are simple, they look easy, they have commentary, they have experts, they have scanners, and when you just look at the color, that should talk to you. So I think what I'm trying to tell you is each module, we've not just thrown modules after modules because they overlap each other. They all do different things. The SWI is a hardcore volume model. The breakout catcher is for that light-footed trader who wants to be flexible and get quick entry and exits, detect where the zones are dormant. The super filter is for someone who likes that RMO primary trend direction. So we all need to try and recognize that we absolutely need every system based on our needs. It's not like you have to eat everything in a buffet. You are going to pick and choose based on your preferences, right? You may not be someone who necessarily has to use every indicator that's out there. In fact, I always joke with Jeff and Kelly that the list of metastock indicators is too long. Someone like me, I delete the indicators. And in case you didn't know, there is a feature where you can delete templates and indicators to simplify what I'm looking for, right? So it's always nicer when you have fewer things, but something which is more solid rather than having a crowded house out there. It helps me stay focused. Well, that's my approach. It doesn't have to be everyone's. In fact, let's look at the next model. So we did the super filter, we did the SWI, which is hardcore volumes. Let's take you into another one, which is very interesting. And this is a chart of Citigroup. And again, I've just put on 30 to help you understand what this indicator does. It's trying to detect where you have high volume bars and those bars are breaking out. So in other words, giving you a counter trend indication. So CTI is counter trend indicator. If you see a spike up over here, that's a buy. That also gets stamped for you on the chart. If you see a spike down on the indicator, that tells you it's a sell. So a lot of times I find that users don't want the indicator. It's fine. If you just like to look at it as that, well and good. So the nice part about the counter trend indicator is the fact that you are able to spot these sells while a market is going up, you get a sell and you see a rotation down. When the market's down and you get a buy, you see a rotation up. Now, will it be that every buy and sell works perfectly? No. I always keep reminding you when you get a buy, try and make sure it's counter trend. Try and make sure the preceding trend is down. And then above all, I want the high to be crossed, right? So if the high of this bar does not cross, it does not really qualify, right? For me, this is exceptionally important. A buy is nothing if the high is not crossed. But this buy is valid because the high is crossed. Because that's the slightest confirmation that you get that this market is moving up. In fact, if you want to try and look for the best buy or sell trades, what I try and do is look for buys which are below a moving average value. So in this case, I'm using what I call the trend flare baseline, but think of it as a moving average. And the good part is this buy that I see is below that red line. So therefore, it's truly counter trend. In other words, likewise, this sell that I see is well above that moving average or that baseline. So that's truly counter trend. So if you're really looking for nicer setups, they always come higher up. That's a truly counter trend sell. So when that low breaches, you get a solid sell. This buy has just about breached that baseline. So in other words, you are limiting your performance on this. So if you really ask me, can I give this a pass? Absolutely. For example, this buy, I want buys which come nice and low down after that deep drop. For example, this sell, again, it's below that red line. I want sells which are nice and high up above that red line. So if you want to keep a little divider, I would recommend you use something like a moving average, and that could be a 50 period average, or for that matter, what I'm using here is a tool which we've released with the new ATM 4.0. It's called the Trend Flare Baseline, and the Trend Flare Baseline is my version of blending in volatility with averages and then having just one final line. So what I'm using is a baseline, and if I've got a sell above that baseline, those are truly good ones. If I got a buy, which is where the bar is fully tucked below the baseline, that's something I want to use, right? So these are very straight cut. Again, counter trend indicator is for someone who's trying to chase a high risk is to reward ratio. So let's understand what the goal is. The counter trend is based off volume data. So in other words, if I try and apply this on an index, uh, I'm not going to get accurate results because an index doesn't carry volume data. But if I looked at, say, the index futures, so say the Nifty futures, or let's say an ETF like the QQQ, which is really got trading volumes, I would be able to get these signals. But any other symbol, any other stock, of course, you have volume data, and therefore you can use counter trend, the CTI template. The CTI template is all about trying to give you counter trend signals. And again, this is not a case where I expect the hit rate to be 7 and 8 out of 10. I'm happy if it's even 5 or 6 out of 10. But the great part is you can see you're able to get rotational points from a very deep level. I mean, very few indicators give you a sell that high up, which generate that kind of a risk is to reward ratio. So if you're chasing even a 5 or 6 out of 10, the point is your rewards are 2x than your risk, right? So the best part about it is it gives you a much better risk is to reward ratio, gives you an early entry. So someone who wants to do options, maybe you want to buy calls when you're that deep and low, because when the markets drop that low, very few people are buying calls. You're at an extreme point, right? So that could further accelerate returns when you look at options. If you're someone who doesn't buy options and just wants to simply buy the stock with a stop loss, you can certainly do that. In this case, your stop loss is going to be where you get the buy bar. Look at the immediate low that it creates. So in this case, it's here. If you want to see 1 or 2 bars behind, if there's anything lower, in this case, these are absolute extreme points. So if I'm selling here, I want to sell below the low. Maybe it's somewhere there. I'm going to keep a stop above that high. So the point is, where are you going to initiate the sell? Well, wait for a few ticks below that low. I don't think you'd immediately go and sell it up there. You'd have to wait for that low to, comfortably break. So somewhere here is where I reckon you'd be taking that short trade and then placing that stop. So that stop's also, played out fairly well. The point is, don't chase hit rate here. So the counter trend is all about giving you a higher risk reward ratio, using volume as its key element again, and trying to give you a counter trend approach to the market. So there again, you see, we've got this template for a very specific purpose, which is counter trend trading. Now let's look at the next piece, which is the trend decider suite. And this time I'm going to go to a 60-minute chart just to add more flavor. And here we are using the trend decider dailies and weeklies. Again, these are default templates. So if any one of you are wondering, how am I setting this up? All you need to do is right click, apply template, and we have the templates over there for you. So the ATM is what you're going to, so for example, that's the ATM trend flare normal. Those are some of the new templates we've introduced. So you would just apply a template, and that's how you would get exactly what we've got here. So there you have the trend decider, and you can look at the bottom. You have the x-axis, which beautifully gets marked out as bullish and bearish zones, and this updates every day. So the green line is the trend decider daily, the red line is the trend decider weekly. So every Monday you have a new red line. So a new red line level comes in. So you know the minute the price is trading above both the daily and the weekly level, you're going to see traction on the upside. Similarly, let's look over here. When the market broke the daily and the weekly level over here, which was just 4 or 5 trading sessions ago, price started breaking through both the green and the red line. There's a problem, right? So we're looking at a bear trend. So the beauty is, you get to know right from this stage that is bearish for the day because you just broke the green line. But I think where it really all comes together is when you see over here that not only is price trading below the green line and the red line, in other words, the trend decider daily and the weekly, but even the green line is lower than the red, right? So everything that I just said is married into the expert advisor commentary. So when you see the word bearish stamped there, it's made sure that not only is it below daily and weekly, it is also that the green line is lower than red line. So friends, if you think that I'm leaving it to you for manual interpretation, not at all. So be worry free that the interpretation is also automated. All you need to know is the template that needs to be applied. Why is this study created? Because this is momentum based. This is just price driven, not volume driven. It's one of those tools which will immediately tell you markets heading down. Or, the minute I'm at this point, I understand over here, not only is price trading above both, but the green line is now above the red. So there's traction expected on the upside. So you could see beautiful movements, and mind you, this is just the month, the last 1 month of data. We had a lot of movement, lot of 500-600 rupees is the kind of traction we saw on that, which is excellent. It's a very good trading spread. For those of you who trading this symbol, you understand that these are signals which are coming to you automatically. These are templates that are pre-built. You have commentary that's pre-built. And all these points which I've just circled up, friends, can be scanned for. You will get alerts from them as well. All I need you to do is take a week or two to try and understand the system, get aligned to the system. There's a lovely manual I've written up. So in case you're thinking, how will I get all this information? There's a lot of education which we provide you. There's a manual that we provide you. And again, all this is very well aligned to be an automated system rather than something which leaves it to you manually. So that, friends, for you is a very quick walkthrough of the trend decider. We also have a trend decider monthly for those of you looking for a very long-term outcome, or a trend decider 15-day, which gives you, another perspective. So multiple versions of the trend decider can be worked upon, and daily and weekly is the original form, and that's the template that I'd like you to use, which is why I'm showcasing to you. Finally, we have the RMO 2 setup. The RMO 2 is all about trying to give you somewhat of an option strategy. For those of you who are really into options, what we try and educate you is the RMO 2 is an indicator which works to a value of +1 and -1. And what we're looking for is every time we get a bit of flattening. So in other words, when the red line from a value of -1 comes to 0 and flattens out, those are areas where you try and buy put options, right? And the reason you buy put options is because the trend is established on the downside. That's why the red was in a negative value. So every time you have a price pullback or the indicator pulls back to zero, these are points where you're really going in and buying puts. And mind you, when you're buying the puts, the market is rallying up. It's really a counter trend approach. And what's the risk that you face? If at any time you see that the blue line pops up to a value of +1, you should be looking at trend change. So the good part is you're able to detect trend change as well. And again, in this case, I've got the zone detector here. If you don't want the zone detector on it, you can absolutely remove it. But what it tries and tells you is a little bit of volatility, and option traders do try and understand what that volatility feels like. But in essence, you're buying puts when the market's gone up and pulled back here to zero. Similarly, if I'm buying calls, so let's say we are right now at a value of +1. If this drops to a value of zero and flattens out, that's a point I could buy call options. So the RMO2 is all around the options trader. So that gives you, so those are 6 core strategies that I just showed you, which was inside the ATM. Now let's walk you through the latest development, which is in the ATM 4.0. I want to start by showing you a chart with what I call the trend flare normal. So we've made actually a whole host of indicators. So if you open up the indicator list, friends, look at the number of indicators there. There are lots of them, right? But what we've tried to do is we created so many different indicators where we put them beautifully onto this template. So it looks very easy and presentable and understandable, because the minute I look at this chart, when I look down at that ribbon on the x-axis, the green and the saffron colors, orange colors, they tell me bullish or bearish, right? And how is it doing that? Let's try and understand the core elements of this. This green line that you see is what we call a baseline. So in other words, the trend flare has two modes to it, a normal and a slow mode. A slow mode is for someone who doesn't want excessive signaling and is okay with a slightly later signal. So you may ask me, oh, that now leaves it to me as to which one should I go with. And that is correct. And that is an important leverage that I've given you. And that's because not each one of us has to be working to a certain pace in the market. I personally am very happy with normal, which is the original form, but the slow mode gives you another element. And again, it's not going to change the moon for you, but at the same time, it may give you a little bit of comfort in terms of not getting too many signals. Now let's understand what is the trend flare. The trend flare are these little orange flare ups that you see. So you can see the orange flare up. You have up flare, up flare, up flare, up flare, down flare, up flare. Then last two were down flares. So if you just look at every flare is summarized by a little diamond symbol on the chart. So when you see a blue diamond symbol, it's like saying I had a trend flare up, right? Does it mean that I'm going to buy on every diamond? No, I want to buy on the first diamond, right? How do I know it's the first diamond? Earlier, the flares were down. Now, this is the first up flare. And I want to be looking at this as my first buy point. Similarly, over here, why is this the first sell point? You got the flare down. Did it break the low? Use that rule of thumb. Sell below the low. What's the risk you would deploy? I would just take a stop loss of the previous bar high. If you can afford 2 bar highs, that's excellent. So in other words, go back 2 bars and see. But even if I just gave you the previous bar's risk, you have a small risk, an early entry, and a beautiful reward, right? Small risk of 1 bar. If you're very generous, you'll give it 2 bars, and that's it. So in other words, when you get a buy over here, buy above the high, but is this a first buy? Absolutely no. The buy has already been running. So don't use every diamond or every flare. So I call this sweet spot. So you see SS plus, that's sweet spot plus. These are sweet spots because these are flare ups. Similarly, you have SS minus, which are flare downs. So wherever you have, so again, I have a diamond there. Whenever that low breaches, which it did, you should start tilting towards the short side. Now comes the element of the baseline. This green line that you see across the chart is something which dissects bullish and bearish zone. In other words, it helps me understand that above this level, And the baseline is calculated based off the volatility of the instrument and is also blending in an average. So there's no point my trying to use, there are many tools out there which try and, work in the form of channels and bands. But here I try to say, let's come to one value where I have a blended equation and I understand that this can be what I call a baseline or a level which decides the trend for me. If I'm above this, I am in a bullish zone. If I'm below this, I'm in a bearish zone. Obviously, when I get a buy, sometimes I may be below the baseline. In other words, I may get a flare up when I'm below the baseline, and that's absolutely fine, right? So, for example, here this flare up happened when I was below the baseline. I'm fine with that. We can take that trade. But as you progress, you can see there's some rotation that you got, some resistance that you got at that green line level. And once we surpass that, we really built the traction, right? So similarly, when you breach the low here and you're below the baseline, you're looking at that movement. So the baseline is more informative and helps you pulse things better. And also let it not be a deterrent because, I often get this question as to I've got the sweet spot buy here. Can I buy above this or should I wait for the baseline? Now that's a very uh, simple question. If you're open to counter trend trading and you're okay, just remember the risk is relatively small. I'm just risking the previous bar low. Or maybe if I'm very generous, the second bar behind it. I'm not risking the moon for that trade, right? If you're going to wait by the time it goes there and crosses the baseline and then you'll close above it, etc., and then you'll want the high to be crossed, you may have already made the amount of money that you risked. So I'm quite okay taking that early entry. That's the whole idea of giving you the trend flare, is to give you that early entry. So the trend flare is a beautiful system where it blends in a lot of our ATM components. So, I often got a comment that, oh, the breakout catches too fast for me, or uh, the super filter sometimes is too slow for me because it takes a lot of time for it to align. So the idea is, could I give you a viewpoint which also blends in volatility all into one chart? And that's what took us a lot of time. We're not a company which just throws out an upgrade just because we have to, right? There's sometimes we do an upgrade a year, sometimes we do an upgrade after 2 or 3 years. And it all depends that can we add something which breaks a competence level that we've already done, which creates more value and more energy and more direction for you and me as traders. So the whole idea is not just to add an indicator, but it is to help you understand that what we've added in the trend flare is not just one tool. You've got what we call the TSL, which is the trailing stop loss levels, which are circles. You got what we call the trend flares, which are these little orange flares, which are diamonds. And you've also got the baseline. And this is a beautiful representation on the top. So if you say, I don't want the baseline and I get rid of it, I could just look at the baseline over here. So in other words, if the price is above the baseline, you'll see a blue box over there. If the price is below the baseline, you'll see a red box. I've tried to give that flexibility to you as traders to understand where we are. And again, this is a tool which is so fascinating to me because of the fact that it gives you an early entry and gives you a trailing stop. So I didn't talk about the circles. The circles are point that if you're long on the equity and you see a circle, you should start implementing a trailing stop. You should start looking at using these lows or maybe this low as a point below which you want to look at getting rid of your trade, right? So that's an important point. So a stop is the circle. For me, it may be the least useful because for me the most important is to get the trend flare breakout. I'm not saying that exits are not important, but I think they come at stage two. Stage one is to understand the diamonds, which is the trend flare signals, and then follow it up with the baseline. So friends, that was the normal one. So the question is then what's the difference if I looked at the same chart with a slow mode? So if I just move to the same NVIDIA on a 30-minute and this time it's on slow mode, obviously the buy didn't come that low. The buy came much later. The baseline is different. So the trend flare will also now be calculated differently because you have reduced the intensity. So you'll still get the sells nice and high up. You're still going to get the buys there, which work out well. You're still going to get, but you can see the stability tends to increase and the speed tends to drop. So you may be like, no, 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 I don't like the flare there. I would rather get the flare a little earlier, right? So you may be quick to compare and say, okay, what if I use the normal, right? What if I just looked at the same chart and I've kept them set? That's the flare buy over here, and that's the flare buy over here. So if you feel, that's a good $20 for me on Nvidia, I'm not ready to wait that much. There you go, right? So here you are with a reason why there could be someone that I don't need so many flares, I just want one. You know, feel free to take and pick. And how do you take and pick? I think the easiest way is go look at the last 15 or 20 signals, pulse for yourself as to which one you think is more your trading style, and then explore that. So give yourself a little time to understand the rhythm of the two. The normal is the original, what I built. The normal is what I mostly use. And I would recommend that's the one to start with. The slow, of course, if you feel that no, it's too quick for me, or you're someone who's absolutely clear that I don't want this pace. I'm looking for stability and I'm not looking at an early entry necessarily, right? So there's a beautiful write up I've done on this. There's a manual in your My Downloads. You have access to this manual. Just go down to the fag end of the manual. I think most of the updates which we did would obviously be towards, then the last 5 or 6 pages. You would be able to see exactly what these enhancements are. So if you're thinking, what are these? This is a flare up. What is this line? That's a TSL or a trailing stop loss where you get the circles. That is the baseline. So friends, you have this manual to go through it. And this explains it to you. And it's not very heavy. It's just a 50-page manual approximately, and that walks you through very concisely what those trading signals are. And of course, we can handhold you through the process of understanding these indicators and signals and getting you all started out. So the manual is, of course, accessible to all users, and you would be able. Now, what if I put both of them together? I could put both these baselines together into one screen, and that would look like this. And now what I'm using is a template called the trend flare with the automatic support and resistance. So if I apply a template here, you have a trend flare that's normal, you have a trend flare that's slow, which I showed you. So I've shown you both of these. And now what I'm using is ATM Auto SR, Auto Support and Resistance. So blue lines are resistance levels and the purple lines are support levels. And these are automatically detected. Now here's the beauty. Everyone thinks that a support or resistance is a previous high or low. And here's what we thought, that no, we need to find out points where multiple indicators on the ATM studies are breaking out and use them as resistance or barrier points. And use supports also based off where various indicators would clock in a negative signal. So that's how we've come to support resistance rather than just stamping pivot highs and pivot lows. So it's a whole new take, it's a whole new approach to it. And I think you understand what about this point? What about here? We're getting a price that's breaking out these resistance barriers, and not only is it broken out, it's also above both the baselines, slow and the normal. So you've got the normal mode, which is green in color, and the saffron color is the slow mode. The minute price is above both the baselines and above resistance, you got a smackingly good breakout. Similarly here, you've got a support, right? So you may think that the market's going up. How's it generated a support? It's generated a support basically because various indicators will turn negative once we breach that. So as soon as you start breaching that, you're above both baselines, you should start getting cautious. You may want to exit, but as soon as you start breaching more and more supports, things are getting uglier. And of course, as you break both baselines, that's when you have a huge movement down. So it's a whole new take on support resistance. And where I'd like to come to you from is you could even use these as moving averages. A lot of you like to say that short-term average is broken a long-term average. Think of this as a crossover of baselines, prices above both baselines, and you're punching out a major resistance. Beautiful setup there, right? So here you've broken a support, you've broken the baselines, but didn't really follow through. You don't have, you're not going to be 100% accurate. But at the same time, you can see that there's a lot of clarity you get, the minute you understand that. And this is automated. I'm not asking you to go draw a trend line. So, I'm taking that subjectivity out, that draw this trend line, try and find out where that resistance is. Or then someone would come and say, okay, why not use this high? We're just looking at where a lot of our ATM studies, the breakout catcher, the RMO2, culminate together to a breakout level, and we mark that as resistance. And then when you couple it with the baselines, it just adds. What I'm really looking for is these kind of sweet spots. These are amazing sweet spots because they not only just break out a resistance, they also are above both baselines. So that, my friends, is the automated support resistance. Now, if you want to learn more, I'm going to hand it over to Jeff. He's going to talk to you a little bit about the masterclass, but let me not leave you unanswered. We have a lovely manual where all of this is explained. We have hand-holding support for you. So if you're someone that does need some guidance, you can feel free to call us and we will help you through understanding that. And I'll hand it over to Jeff, who's also going to talk to you about an upcoming masterclass that we're doing, which is a great opportunity where I'd like to share and showcase more from a trader to a trader perspective. So that's the ATM 4.0, just released this month in Metastock 19. And I again say that Metastock 19 is the version to have. And that's because all of these studies are really going to work the best, display the best in Metastock 19. That's what it's built around. So great job. You enjoy all the new features of Metastock 19. And of course, you enjoy the new ATM 4.0. Over to you, Jeff. Let's
Thanks.
open it up for questions and your wrap.
For sure. Thank you. And I love how this looks at 19. I just think it looks beautiful. So we had a comment I wanted to read to you real quick. Meta World from YouTube says, I know somebody who learned stock market from you. He prays that you are his guru, and I want to learn from you. Is this possible? So I'm going to talk about that masterclass, but I wanted to kind of read that out to you because we get such good comments on kind of the training that you do. And I just love
Thank
it
you.
when people come in and they're satisfied and they're happy. And, great job. Rahul wanted to know, he asked a question earlier. Do you have a preference for a time frame for Nifty when you're looking at a 50 to 75-minute chart?
I think that's a great question, and I'd probably say this applies to the entire group. It doesn't matter what you trade. The first thing to decide on is what time frame you want to trade on, because if you're going to keep changing the time frame, you'll never have consistency. So if you've decided you're trading the Nifty with a 15-minute chart, do the next 10 trades on a 15-minute chart with the same rules on the same symbol. That's when you'd realize that 7 out of 10 trades are correct. Otherwise, it'll be someone who academically looks at things back and says, in the past, everything's okay. But when I did it, it doesn't work. And that's because sometimes we have 1 or 2 bad trades and we quickly change the time frame or change the symbol. It's very important to have a consistency of the symbol. My personal preference, since I'm not a sharp day trader, I don't really just trade for a 1 day innings, so to say. I'm very happy with looking at intervals such as 25 minutes, 75 minutes. Those are my go-to time frames. And that's simply because you must break the market up, in terms of how much time you're trading. So if you're trading 375 minutes in India per trading session, if you divide that by 5, you get 75. And I'm going to extend my answer a little bit for the benefit of everyone. Everyone wants to use an hourly chart. It's a round figure. But I say that's wrong because you don't trade 7 hours or 6 hours. You have 75-minute bars, which are 5 perfect bars. If I do an hourly chart, I'm never going to have a perfect hour at the end. So even for the US equities, 30-minute is my go-to and 78-minute. And this may sound crazy, but 78 minutes is a great time frame because, again, I'm trying to break up 390 minutes of trading since you open at 9:30 a.m. to 4 p.m. If you divide 390 by 5, you get 78. So I've broken up my market into 5 bars.
All right, very cool. A couple more questions. I'm going to handle this one. This one real quick is also from Rahul, who has a great name. But he wants to know if you have a system that would be recommended for somebody that wants to trade options deep in the money with a 3 to 4 week timeline.
Absolutely. Two of them that I just briskly touched on. And, again, this session is more to briefly outline for you the inclusions within the ATM. And the counter trend indicator and the RMO 2, those are your two go-to studies if you're looking at the options market. Because even if you trade options, Rahul, the most important thing for me is direction, direction, direction. It's not volatility. Volatility is important, but at the same time, it's direction. If you don't know the direction, half the problem is right there. You may know all the other permutations and combinations. You got the direction wrong. The odds are 90% you are going to be losing money. So having a direction, a price target in mind is something which I always focus on. So try and use these two studies. And of course, even if you like something within the trend flares, right? This is again a great study which gives you early entry. If I looked at a 75-minute chart and I say that, look, I'm going to get my a successful trade in say 20 to 30 bars, that's like saying about almost 2 weeks of data. So yes, these are all studies that's a beautiful time frame you have for the Indian markets, 2 to 3 weeks.
Cool. And Umesh says, do I need Metastock 19 or will this work with 18? And I can answer that real quick. It will work with 17 or 18 or 19. But the 19 version of ATM actually takes advantage of all of the new features and all the new visuals that came both with the new charting engine and kind of the new container. So from a personal perspective, you can install it. It will work with 17 and 18. But I have to say that I was looking at the charts today with Rahul and the charts that he's showing, and they're all in 19, and it just looks like such a beautiful experience to me. And so I would strongly recommend that you get 19, but
I'll interrupt you. 19
yeah.
is your best upgrade. You should definitely get it. It's just so good. It's such a big difference. The whole feel of it is so much nicer. So I wouldn't think twice on getting 19.
Me neither. I always say it's my favorite, but it always seems to be my favorite. So anyway, Rahul, I'm going to go ahead and kind of talk a little bit about the systems and kind of how to get them. And so let me go ahead and take the presentation here. We'll do this, and then we'll go ahead and show my screen. And one of the things that's kind of a bit challenging here is just like, we're on 4 versions of this. And the thing that I really like about kind of Rahul's mentality around design is like he doesn't create systems just to say that there's 17 more systems or anything. They're very thoughtful in terms of the way that he puts them together and the features that are added. And so we've got 4 versions of these, and there's a lot of stuff that we can talk about. And it's a fairly impressive package. I think this is the only add-on that we've done 4 different individual unique purchases. So I kind of want to go through kind of what's included because it's quite a bit. Umesh, you asked another really good question about if I have ATM already. Thank you for using Metastock. Thank you for having ATM. If you already have ATM, what you can do is you can actually just go up to the metastock.com/mydownloads. If you've got a subscription to it, it'll have the 19 download already for you. It's ready to go. Just go grab it. So thank you for subscribing. If you're a subscriber now, go grab it. There's nothing we have to do on our end. All you need to do is go download it. It won't automatically update itself. You just have to go grab the download and install it. Before you do that, make sure you uninstall the old version, get rid of that, and then install the new version. But it's ready. Okay. All right. Let me get a little bit more on track here. We could spend a lot of time on the different systems and what's included and that kind of stuff. I do want to talk about Power Screener. Power Screener is just such a cool app. I was talking about how Rahul designs stuff that is useful and that is functional and that's simple and easy to understand. But with the Power Screener, we could do a whole demo on that just by itself. But you can put in there, it's a quote list. It can give you visual alerts on any of the indicators that are in the ATM4, plus a whole bunch of other ones. Like you see right here where it says candlesticks, it's actually telling you if there's a candlestick pattern on the chart. It can give you voice alerts. You can put notes in there. It updates. If you've got real time, it updates in real time. It also works with DC. It's a very, very good quote window, kind of like a screener as well. It's a real time screener that kind of keeps you abreast of everything that goes on in the market. And it's really, really functional, useful, something that is great, something that Rahul designed because it wasn't something Metastock could do. And it's something that he wanted to give you. So very, very cool functionality there. But in addition to that, you could probably just buy that by itself. You're going to get all of the methods. You're going to get a breakout catcher. You're going to get the SWI, or the Strength Weakness Index, the super filter, the trend decider suite, the counter trend, or the RMO2, and the counter trend indicator, the trend flare suite normal and slow, and then the new auto support and resistance. And so you get two brand new systems that are included as part of this. All of the templates, and we were talking a little bit about the templates, all the templates have actually been reworked as well to kind of take advantage of the new charting engine and the layouts and the interface, and they look really good. So in terms of the systems, they all kind of have their own unique needs. So your breakout catchers look to find breakouts, kind of has its own detector. It helps you kind of interpret whether you're in a bullish or bearish phase. You've got the strength and weakness indicator. You've got the RMO super filter. RMO is such a great system as well. This one, it adds to what was already a really good RMO, where you kind of get the changing colors as things start to weaken, but they're still bullish, or they start to they change color when your bearish trend starts to weaken. So it gives you a really, really good idea in terms of what's going on. You've got your trend decider suite. You've got the RMO2 that's included, the counter trend indicator. New to this one is the ATM TREND Flare Suite normal and the slow mode. And Rahul talked quite a bit about how those work. And then also the automatic support and resistance. And so that's everything that's included out of the box for ATM. Massive add-on. And not just massive in terms of like it installs 100 indicators. It installs some very useful indicators that are designed purposefully. So you get the indicators, you get the systems, you get the methodologies, you get the Power Screener app. All of them have expert advisors. All of them have explorations. They'll have commentary. Very, very well designed. So with ATM, basically, it's a monthly cost. You pay for it every month. It's $149 a month. Or if you get it here at the webinar as a result of the webinar, you'll pay $129 a month. So if you do an annual, there's going to be two bonuses that are included with that. One, you're going to get 2 one-on-one training classes from Viratech. And in addition to that, you're going to get the free masterclass. So you might want to know what the masterclass is. I'm glad you asked. Good question. Let me go ahead and kind of talk a little bit about what the masterclasses are, when they're at, what they're going to be. We're going to start the masterclasses. Session 1 is going to be at noon Eastern on June 6th. 2024. It's going to be 75 minutes to 90 minutes long. And during that, Rahul is going to talk about the core breakout models. And there's kind of a bit of the bullets. One of the things I said at the top is that Rahul was very, very good at kind of doing training and talking about this. I've done a lot of sessions with Rahul over the years, and I just love how good of a teacher he is. I think that's probably one of the reasons we got the comment from Meta World and about the guru and all that kind of stuff. So session 1 is going to be 75 to 90 minutes, and it's going to be noon Eastern. We will record this, so if you can't make it, we'll make it available on your downloads page. Even if you come, you're going to want to watch it again. You're going to want to be able to go through it, take notes. It'll be available as a recording. The second session we're going to do June 7th, the very next day. It's going to be also about 75 to 90 minutes. And in that hour and a half, we're going to talk about trade identification and detection. So this is absolutely free if you do an annual subscription to the ATM. But if you want to, you can also do it as a monthly package. And the pricing on that is actually pretty good as well. I mean, honestly, with the annual and they're throwing it in, that's a very, very good deal. But if you just want to do like a subscription to the ATM, we've kind of got a bundle package where we're going to normally, like if you went ahead and subscribe to ATM, You paid for it for 3 months. Normally, you'd actually get a normal price of about $80.86. Here, we're going to do the masterclass, we're going to do the webinar, and we're going to do 3 months of ATM. So, well, not the webinar. The webinar is the masterclass. We're going to do 3 months of ATM, plus we're going to do the masterclass. The normal price on that, just separately, if you just bought the masterclass and subscribed to ATM for 3 months, would be $886. Here, it's going to be $499. So with that $499, you're going to get 3 months of RMO ATM 4.0. You'll get a lifetime discount. So normally the pricing for ATM, for ATM 4, it's normally $149. You'll get a permanent discount of $129 per month for your ATM subscription. That's not going to change. That won't ever go back up to the original rate. You'll get a permanent discount. And then you'll get 2 live training classes, as we kind of outlined earlier. So a couple ways you can do this. Like I said, if you want to give us a call, you can give us a call at 800-882-3040. You can join, you can just sign up for this online. The landing page is ready to go. Metastock.com/ATM, or you're going to go to metastock.com/saleschat. If you have any questions, if you want to see some charts, if you have want to get some more ideas about what we're doing, go to metastock.com/saleschat. We'll be happy to answer those. So there you go. Hello, Zdenko. It's good to see you. Okay, there you go. Let's see. A couple
unmuted.
In. Let's see. Umesh says, great, thanks. I would love to see you. I'd love to attend the Masterclass. I look forward to seeing you there. I'll be there. I'll be taking notes. I always do. I always learn something from Rahul. John says, do we need 2 subscriptions to have RMO on a laptop and a desktop computer? No, I believe, correct me if I'm wrong, Rahul. I believe you can only use it on 1 computer at a time, but you can install it on 2. So correct me if that's not the case. Is that right?
Yes, spot on. Yes.
Okay, all right. The Masterclass is only available for those who purchase RMO 4. I would recommend, if you don't have RMO returning officer, get it. In terms of the package, a lot of the methods that we're going to be talking about during Masterclass are going to be in ATM 4. So they kind of go together, right? You're not going to get a lot of value out of the class if you don't have the add-on, which is why we put together the bundle offer. With the bundle offer, you get the 2 extra months free for ATM. If you do ATM for a year, you actually get the Masterclass for free. But you want to do them together. Definitely ATM 4, well worth the purchase, something that you're going to use all the time. And the training classes are just something that's going to help you really get the most value out of that. So, and as a bundle price at $500, it's a really good deal. So there you go. Thank you for the question too. I think that's it. Good to see you also, Zdenko. I hope everybody enjoyed the webinar today. I hope everybody's healthy, well. I hope you stay safe, stay healthy. We'll go ahead and cut it there. Thank you for coming. It's good to see you. If you're still watching us on YouTube, hit like and subscribe. It helps a great deal. We appreciate it. And we'll see you again at the next one.
Hi, Kelly Clement here from Metastock. Before you go, I have 2 quick things for you. 1, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTube book, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those 2 things. Thanks for joining us and keep on trading.